Welcome back to Bunnex Investment Group. We are going to talk about the day 3 entry strategy, but it's going to come in 3 parts. So this is going to be the first part, and when you watch this part, make sure you look for the other parts on our channel so that you fully comprehend and have the rightful level of appreciation of the war concept. So basically, day 3 entries comes after 3 days of rise. That is the basic rule of thumb that anyone who talks about this method will say. But there is a lot of subjectivity within doing so. And that subjectivity will require you to watch everything that I'll talk about in these 3 parts. So the first part is going to be non-indicator based, and it's going to be only price action. By price action, it means whatever where we are going to make some entries, it's going to be coming out of real charts and without anything over the charts. So the first thing that you always do when you come to the charts is to zoom in so that you can see where the market last turned. And from where the market last turned, that is where you want to initiate your levels counting or your days of counting. We say the basic principle is at day 3, that is where we expect to see the market to reverse. So when we reach day 3, that is where we want to see the setups that I'll tell you shortly. So in this particular case, we can see that there is this particular point of reversal, this one. There is also this point of reversal. So from these points, that is where we want to initiate our count, or where we want to start our count from, going further up to day 3. And at day 3, that is where we want to see a market reversal. So the basic structure of this particular trading style is we will require 3 days of rise in one particular direction. A rise is defined by the opening price, like at this particular point, and the closing price have a significant difference, or there is a price increase from where the day started and where the day ended. So on this day, we can see that there was opening at this point and closing at this particular point. Therefore, this was a day of rise. The following day, we can see the opening and the closing were not in line with the first day. Therefore, this was now considered a pullback or a phase whereby the market makers are now accumulating more contracts to push the market much further. So to avoid getting confused whilst you are building your 3-day cycle, you need to actually box out these levels, and probably you can box a level, an impulse, and its consolidation or pullback, or basically the low and the high of that particular day. After that, we can see that there was another day of rise where the price started at this point and ended at this particular point. So we box it again. On our count, we now say we have 2 days of rise in one particular direction, day 1 and day 2. On this particular day, what can we say? We can see that the opening price and the closing price were almost equal to each other. This is called a day of consolidation. Therefore, we cannot validate it as a day of rise within our cycle. Therefore, a day of rise was going to be this one. 3 days of rise in one particular direction will actually result in what we call a reversal. However, the reversals actually comes in various forms. We have what we call paged M's, we have what we call half Batman structures, we have what we call basic M's or basic W's. So I'll just talk about 2 of those here. The first one is basically a W pattern, like in this case. It should be a multi-session whereby the first leg has occurred in the London session and the second leg has occurred in the US session. We may as well have these 2 legs in different days whereby the first leg has occurred in the on Tuesday and the second leg on Wednesday or Thursday or even Friday. So what we are saying is the two legs of the pattern must not be in the same particular day. So this is a basic W pattern whereby the market creates first leg and then creates second leg at the first leg level like this. However, there are other scenarios whereby the second leg will actually protrude the first leg level. We call that particular pattern a paged M or W. So this is the first leg, for instance, whereby they create this first leg. After creating that first leg, we will see the market actually passing through the high of the first leg level like that, and then creating what we call a page, which is this structure. This structure or a page is formed whenever the market makers wants to take out the stops of those who have entered on the first leg level. That is why I always advise not to enter at the first leg of a pattern, because there is high chances or high probability that the market makers will come and grab all the stop losses above the first leg level like that. So how do we predict that the market is going to issue something like this? What we do is, after counting these 3 days to the upside or these levels, at day 3 we start now to prepare to get into the market. At the end or at the close of that particular day 3, we need to put a line, and that line is going to be our datum or a point where we would expect to see two things. It's either the market will issue an Asian session and 3 swipes to the high on the second day, or on the day we anticipate to see the second leg being formed, or the market is going to shoot and induce breakout traders in an opposite direction which they intend to shift. So on this particular day, we can see that the market actually issued, it had an Asian session, right? Asian session was issued, which looked like this. Asian session issued, and after that Asian session was issued, we can see that out of the Asian session we had a best of 3s. So we are saying first leg has been issued and has been marked 3 at the third day of the cycle. After the first leg has been marked, on the second day we start to observe the Asian session, and the Asian session must issue a consolidation phase 1, and then we see a run out of the market outside the Asian session, and then after that run out of the market outside the Asian session, it should be at least 3 swipes or 3 candles to the upside. So we know that we have determined the last day of the cycle. The Asian session is in line with the properties that we've said, then a run out of the market 1, 2, 3, and at this particular point in time we now start to look for candlestick reversal pattern. It's unfortunate that this is a pair that is active in the Asian session, since it involves the New Zealand dollar against New Zealand dollar, which is actually an Asian country. So from there we can see a bearish engulfing pattern. But whilst we were on this particular structure, after the Asian session was issued, there was no move that was going to be issued. So this kind of a setup is seen by the fact that when they put the first leg, or when they reach the third level, there is no retracement to the upside or in an opposite direction. In this case, you can see there was this third day that was issued, and there was a clear retracement. Whenever there is a clear retracement, we would expect to see the ordinary M or W pattern. But whenever there is no clear retracement after day 3, we expect to see a paged M or W pattern, like what was issued. So whenever we see no retracement at the end of the cycle, a page is likely to form, and on that page we actually start to look for candlestick reversal pattern, namely railroad track or bearish engulfing pattern or any other candlestick reversal pattern that you can get. Then the market actually went to the downside like that. Intraday trades 50 pips or equal to the average daily range for that particular pair. So at this particular point, we can now see that they issued a probable reset. Then from that probable reset, we start again our count. How many levels do we now have going to the upside? We had the first one, level 1. Then we had second day of rise. What are we now expecting? If they issue the third day of rise, the two principles that I've taught you, one being expecting an ordinary MOW pattern which has a proper retracement from the first leg level, or a paged MOW pattern which does not have a retracement from the first leg level, then we can actually make an entry in an opposite direction. So basically, this is how we will actually trade the 3-day cycle strategy only using price action. And then the next part is now I'll start to tell you how to further simplify, because in a noisy structure, this will be a bit difficult and much more subjective. On that note, I'll see you in part 2.